What are the best loans for rental properties? If you are considering investing in rental properties, you might be wondering what the best loans are to help you achieve your goals. Choosing the right loan can make a big difference in your returns and cash flow. Let's break down some of the top options available for rental property financing. First up, we have conventional fixed-rate mortgages. These loans are the most common choice for rental properties. They typically come with terms of 15 or 30 years. A 30-year fixed-rate mortgage provides stable monthly payments, which is great for long-term budgeting. However, keep in mind that interest rates for these loans are usually about 0.5% to 0.75% higher than those for primary residences. If you are looking at multi-unit properties, expect an additional increase of 0.15% to 0.25%. To qualify for better rates, a credit score above 700 is often needed, while a minimum score of 640 is usually required. This type of loan is ideal for investors focused on steady cash flow and long-term holding. Next, we have adjustable-rate mortgages, often referred to as ARMs. These loans start with lower interest rates compared to fixed-rate options. However, the rates can adjust based on market conditions after an initial fixed period, which is commonly 3, 5, or 7 years. If you plan to hold the property for a short time or anticipate refinancing before the rate adjusts, this could be a good option. Just remember, if interest rates rise, your payments could increase, impacting your rental cash flow. Another option to consider is Federal Housing Administration loans and Veterans Affairs loans. FHA loans are primarily for owner-occupied properties, but can be used for multi-unit properties if you occupy one unit. VA loans are available for eligible veterans and offer competitive rates, but they also requiring occupancy. While these loans are less common for pure rental investments, they can be strategic if you plan to live in one unit while renting out others. Portfolio loans are another great choice. These loans are held by lenders and not sold on the secondary market, allowing for more flexible underwriting. They can be particularly useful for investors with unique financial situations or multiple properties that exceed conventional loan limits. While interest rates may be higher, the qualification criteria can be more accommodating. Lastly, if you are looking at properties with 5 or more units, commercial loans are typically required. These loans have different underwriting standards and often come with shorter terms, ranging from 5 to 20 years. They may also requiring larger down payments. Interest rates for commercial loans are generally higher than residential loans, but they can vary based on the lender and property type. When it comes to investment property mortgage rates, keep in mind that they are influenced by factors like 10-year Treasury yields and investor demand. Currently, average rates for 30-year fixed investment property loans are around 6.8% to 7%, which is roughly 0.5% to 1% higher than rates for primary residences. Down payments for investment properties are usually higher, often requiring at least 20% to 25%. Lenders will closely evaluate your credit score, debt-to-income ratio, and financial reserves, so maintaining strong financial health is essential. In summary, the best loan for rental properties will depend on your investment strategy, holding period, and financial profile. Conventional fixed-rate mortgages are a solid choice for long-term investors seeking stability, while adjustable-rate mortgages can benefit those planning shorter holds. Understanding the costs and qualification standards for investment property loans will help you secure financing that aligns with your real estate goals.